Welcome back, and joining me as we recap on the day's markets action is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. It seems like on the economic data front, the week is going to be quite quiet, but of course we know that nothing is really quiet when Nvidia's earnings are coming up. They're coming out sometime, I think, on Wednesday this week. What are you making of market sentiment ahead of those results that could really be a big catalyst for markets?
Thanks, Anati. Yeah, I think there's a lot of expectations built into the price of Nvidia. They've been an incredible performer, and I don't know any companies that are growing at 262% earnings year over year at a company that size. So yeah, let's see how it plays out. It'll definitely have knock-on effects to the broader tech community. And the Nasdaq and the S&P 500. So let's see how it goes.
All right. Praying for those who only have a tech in their portfolios. But I don't know. Things could actually turn out really well. So we'll see on a Wednesday. Let's take a look at some of the company news that came out on the JSE. Let's start off with the Telkom. They released their interim results today, adjusting for things like restructuring costs. We did have growth in their key financial metrics. And quite interesting, there's really been a lot of buying activity there. We even saw it when they took out their trading statement, and now with their earnings today, the share climbing about 5% after the release of those results today. Is Telkom on a sustainable path of growth?
I think we'll have to wait and see. Revenue is only up 2%, which isn't a lot.
Yeah.
But data revenue is up 16%. And the CEO mentioned that this is their strategy. It's a data-led strategy. Voice is eroding. Voice is a commodity, and that makes sense. 15 years ago, we were all phoning each other using voice, whereas now you can just make calls via WhatsApp. Of using data. So I think the strategy makes sense with the focus on the data side of things, and now it'll just come down to execution. So if I'm a Telkom shareholder, looking at the data revenue going forward, that's a key indicator for me.
All right. Well, Andrew, let's go into chicken. Astral Foods, biggest chicken producer in South Africa, came out with the year-end results. Those numbers really taking off. We did have an increase from the top all the way down to the bottom line, looking like a year back to normalization. We did see that share pop over 2%. Have these feathers returned to flight?
I hope so. Revenue growth up 6%, but then profits and earnings up, almost 200%. If I look at Astral's history, the last couple of years, let's call it the last 5 years, revenue is normally stable. It's kind of growing steadily, single digits, but then your earnings and cash flow have these wild, volatile swings. And these results are kind of no different. And I think it comes down to the input costs, the animal feed, and all sorts of other things that go into Astral, doing its business. So good set of results, and hopefully the worst is over.
Good set of results, but I'm wondering with a company like this, because it is quite cyclical. Can you actually be invested in this for a long term, or would it maybe be more for short-term trading because of the kind of cyclicality that is embedded in the stock?
So my view is it's very similar to a mining commodity kind of stock. So therefore, I think it's more of a short-term play as opposed to a longer-term investment.
All right. Well, let's get into cars. Quite a diverse company review that we have today. We Buy Cars releasing their year-end results today. We did see a double-digit increase in revenue, all the way down to a 9.9% growth in core headline earnings per share. Also, just because I noticed that there's a difference between the actual headline earnings per share and the core headline earnings. What kind of adjustments are we making for there?
So off the top of my head, I can't remember exactly. I think with a company like We Buy Car, we just kind of focus on the core for now. There were a couple of funnies we had to strip out. But even looking at 9.9% earnings growth, double-digit revenue, it's hard to fault that. They are selling cars, which are expensive products in a very, very high interest rate environment. And financing is difficult for a lot of people. We've also had low economic growth. So they also mentioned that their gross margins were maintained. So, I think We Buy Cars is a very, very good business. I don't know if you've dealt with them before. I've had dealings with them, and I've got family members. It kind of feels like they run circles around their competition, if I'm being totally honest. They are very, very good, very easy to deal with. They were mentioning their goal is to be selling 23,000 cars per month by year 2028. At the moment, they're selling around 14,500 cars per month. That was the July stats. So, yeah, it's certainly some growth levers that they want to pull there. I think it just comes down to valuations for investors. It's up over 100% since it listed earlier this year.
Absolutely incredible. Well, Andrew, let's get to your stock pick for today. What are you hanging your hat on?
Sure. So my stock pick today is FirstRand. Look, things are looking a little bit rosier in South Africa over the last few months. We even had the S&P rating on Friday, which was positive, the outlook, which I think caught us all by surprise. So things are looking a little bit better in South Africa, despite this FirstRand's on a PE of 11. So they haven't had much of a multiple expansion like we've seen with some of the retailers. So they're not expensive at the moment. They're on a forward yield of 6%. So it's not going to take a hell of a lot for FirstRand to be giving investors double-digit returns from here.
All right. Well, thank you so much for your time and your analysis on what has moved investors' money today, Andrew. That was Andrew Padoa from Sasfin Wealth.